Hi, welcome back to Trading Corner. We're just going to jump straight in. But yeah, maybe let's start with the margins because they've been
Yeah, they've been
fairly less volatile, right?
yeah they've been all right, I think. So I mean, talking to people in Europe, they think margins are okay.
Yeah.
US look good.
Relative to last year, how are they doing?
I suspect they're lower, but still not at levels where you'd be thinking about significant run cuts.
Yeah.
I think where maybe they're probably under more pressure is the East.
Okay.
So I mean, especially last week in that kind of scramble for barrels.
Yeah.
I think that probably showed that refining margins were all right, given that they were so desperate to kind of lock in volumes when like the Russia sanctions stuff was like hitting the headlines. Yeah, so amazing couple of weeks.
Yeah, it's been phenomenal. I mean, yeah, so the initial reaction, like obviously everyone buys into this stuff. I mean, to be honest, I was surprised how much people bought into it because a standard playbook. It's kind of, we've had sanctions before. The market should know how to cope with them. There've been workarounds. I mean, yeah, people aren't saying that they're still taking Russian barrels above the price caps, but realistically they are. It's just labeled as something else.
And also the timing, like if it was the front spreads that moved up the most, but
Yeah.
if the sanctions weren't, I mean, this is with hindsight as well, so I'm not
Yeah,
sure,
of course.
how I reacted last week, but yeah, why the front spreads moved up so much when
Yeah.
actually potentially the sanctions didn't really impact till later anyway.
Yeah. Yeah, it's been quite I mean, okay, I personally want to talk about crude a little bit because it's been a bit of a roller coaster. So dated Brent, obviously really strong correlation with the Brent spread. So it's kind of tracked that a little bit. Dubai has just been its own beast. I mean, the buying we've seen on the Dubai spreads has been phenomenal. So obviously a lot of that is down to, India take a lot of Russian barrels. Now they're going to be looking to Saudi, UAE, etc. to kind of displace all that. China to some regard, although I haven't heard China so much, doing these big tenders, etc. So I think a lot of it has been down to the Indian refineries. So yeah, Dubai has been flying, which obviously worked quite nicely off people that were positioned long in November and December. So mainly Totsa, to be honest. He kind of ran up on the pricing quite aggressively, took a lot of cargoes and has done phenomenally well to now issue those back into tender. So I'm sure they have done very well. And that flow of cargoes has kind of, yeah, maybe it was a bit of a respite for the market to be like, actually, here is the outlet now, and let's get rid of stuff and start a new cycle. But this strength is now filtering into Feb March, Dubai, which, I mean, currently I think it's pricing 220, which is just outrageous. Like, it's so strong on a one-time spread. So it'll be really interesting to see what happens to that as we go into Chinese New Year next week. So yeah, Dubai total own beast.
And also with like margins that maybe aren't that great in the East.
Exactly. So I mean, some stats came out from China, I think earlier this week, about their throughput for Q4 24, and it wasn't particularly impressive, right? I think it implied that their margins were quite low. Obviously, not obviously, but some of the refiners, the state refiners versus the teapots, there's a bit of difference in how much they're running, but the teapots generally had quite low throughputs, so it would assume that the margins weren't great, and I can't imagine they've picked up on, cracks coming off, etc. So yeah, I don't know what they're going to do now into Chinese New Year. I expect we're going to see some weakness there. But dated has been, I mean, for a market that likes to be long, it has performed so badly.
But it's still quite high. Do you not think?
No.
Really? On a historic basis, is data not relatively high? Like the diff, the data diff.
So the diffs are currently pricing 45 cents. So to put into context, last October we were pricing $2.
Yeah, but the last couple of years haven't really been normal, I don't think.
No, but given sanctions and the threat of, well, not even just the threat, the knock-on effects from Dubai. So if Dubai is pricing super strong,
from that perspective, yeah.
On like kind of around $4 they're pricing on March barrels, you'd expect that some of the North Sea crude will be paused.
I guess fuel oil's been relatively very strong as well compared to the last few years, kind of coming out of IMO.
Yeah.
It's made pretty much a full on recovery and is super tight. So
It's just, I guess, so the isolation of the strength has been really, really unusual because, as I said, the market usually loves to be long dated. It's a fairly good benchmark to, be positioned long in because there are a set number of cargoes that you need to clear. But really what it's highlighting is, well, firstly, freight is just absolutely, through the roof with the sanctions. So a lot of the ARBs are shutting for that reason. But it's also expressing that actually the demand in Europe and in the US is really not very good for crudes.
it may also be something to do with just the pricing of fuel oil, because when you buy a barrel of Dubai, I think like it's potentially like 50% of it is because it's so heavy,
fuel,
like
yeah.
it's fuel oil versus like a much lower percentage if you're buying like 40s or one of the data grades. So
what is the fuel naphtha spread at the minute? Is it positive? It must be positive, right?
naphtha's still positive relative to fuel oil at the front, but compared to the last 2 or 3 years when fuel oil's been very weak because of the IMO spec change in 2020, fuel oil is relatively now much stronger than it was back then.
Yeah.
So I think you could make an argument that could be playing into like a bit of the kind of the like Dubai versus Brent.
Yeah, potentially. And actually, what we've seen locally in Europe as well is like just loads of TI Midland coming over from the US, hitting Europe, and European refiners just can't handle it. There's just too much crude around, it feels like. So in the last...
Or maybe too much of the wrong type. Maybe it's like
Too much,
light and
yeah,
like, no one
potentially
wants to
too
make
much.
naphtha at the moment. Like.
Exactly. And like the high freight rates on TD3 are just, shutting a lot of this, shutting a lot of these cargoes in. So, it's just funny how quick things can change though, because, this time last week, I think a lot of WAF barrels were getting booked by the East. So we had a run up on dated and just a monumental crash.
Yeah, I think week to week would have been one of the most interesting. I think you could have had pretty much any view, and you would have had a moment to call yourself right.
Yeah, or wrong.
Or wrong, yeah. Across the 2 weeks.
So where we go from here, I mean, for dated especially, I think now we've kind of reset lower. We're 40 cents on the diffs. The dated Dubai, I think, is down to minus $1. So obviously you can't look at that in isolation. You have to look at it with the freight. But if we have any sell-offs in freight, that should help that dated Dubai contract rally a bit more. Whether that comes from dated strengthening or Dubai weakening, let's see. My gut is saying I think Dubai needs to weaken. But again, we're very much in a very headline-driven environment.
Yeah.
So at the mercy of, Trump's Twitter, sadly. But let's see what will happen with the
probably
sanctions
agree
further.
on that. I mean, I don't trade Dubai with much conviction, but I would have thought from the margin perspective, like margins are weaker in the East, and from
And Chinese New Year as well, right? So let's see who's around next week.
Yeah, and also like which way is Trump going to go on sanctions, and what's the path from here? So like, yeah, like it's not inconceivable we might have a scenario where they Ukraine peace deal gets found and maybe sanctions come off, but
and we still have the threat of OPEC. I mean, I know we've been saying it for the last 6 months. When are they going to come out with these barrels? But you look at the Dubai curve and the strength is very much in the front. So if it does come lower, fine. But if it doesn't, what we might see is just as we roll up, those front spreads just keep rallying into pricing because people don't know when this production is going to come out of OPEC. But either way, the curve is super, super interesting here. I mean, without sounding too kind of risk averse, I don't think you necessarily want to put on loads of position until these cargoes get shifted a little bit. But coming into turnarounds, if that does happen, it's likely it's going to be very short-lived.
Yeah, so I mean, I think that's a good point. Like from the crude perspective, like, I mean, February we should have reasonable runs, but as soon as we're kind of getting into March, we're heading into, you know, from the peak runs in maybe December, January to through to March, April, we're probably going to have like an incremental like 4 or 5 million barrels of refinery capacity offline and turnaround. So like
Wow, that's a lot.
that's a substantial change to the. It will be a substantial change to the market, and like I
Yeah.
personally, I think if you know when we're having this, you know, like a forward guess, but like when we're having this chat in March, I would have thought it'll feel quite a different. We'll have quite a different sentiment on crude. I expect. I mean, obviously anything could happen geopolitically, which
Yeah.
could completely change that. But I would have thought that the sentiment on crude should be more bearish, kind of in a couple of months' time, when there's a lot of barrels like floating around.
Yeah, I mean, it's this year we go into Contango. Let's see.
I very much doubt we get to. Or possibly we do, and then you know people buy it and it moves.
You say that, but I think what was it June 22 we went into June 23 we went into Contango briefly, end of June I think it was.
Feels like it dips in and then everyone like buys
Rushes
it.
to buy in, exactly. Yeah. December 23 we also briefly hit Contango on the time spreads, and over those two time periods, like the market was way more constructive than it feels like it is now. I mean, again, I don't want to, keep repeating myself, but the fact that we're not on $2 diffs in such a like politically strong, or should I say, supply shock market is just crazy. If this had happened last year, we would be through the roof. But yeah, the real difference I think this year is the US aren't. I mean, maybe you can talk about this a bit more, but it looks like the US aren't doing so well in terms of their margins potentially. A lot of the Midland cargoes are hitting Europe, which I don't think the market expected so much of.
I mean, from a margins perspective, their margins are decent. So I don't, in the US particularly. So
because even all the share Brent boxes, they're kind of flirting around flat, but like, I think the front one is now quite convincingly -10. So the spreads are definitely underperforming.
Which is
Brent.
surprising as well, given, I mean, if you look at stocks at Cushing, like they're actually super tight. Like you could argue they're almost at, close to working inventory levels. So that, I mean, the weakness in those boxes does surprise me. But maybe, I don't know, that's a structural change over time that the US is like becoming this kind of export powerhouse, and it's always kind of getting barrels out. So that kind of weakens the spreads, but
I think it's well for me generally, like when the boxes start to get around -15, it does feel like it's probably a good time to pick them up. Even when
is that an individual month? Like
-15 in box. It just, as I said, it kind of seems to fluctuate back towards flat, and then obviously there's some noise in between. But if you can hold on, it seems to be a fairly decent trade. But yeah, for us, for crude, I would say the biggest factor, like right now, the marginal thing making everything move is freight. Like we really are so sensitive to freight, so we just need to be aware of that. But anyway, so that's crude done. What about maybe more products on the individual products?
Yeah, so naphtha, I think normally it's quite like people like, and maybe it's a crowded like fund trade, but people like being long Q1 naphtha.
Yeah.
And that's really not performed.
Okay.
So it was kind of extremely strong into Q1 and then just kind of fell
into pricing as well.
I think it's fairly weak in the pricing. Cracks are weak. So naphtha's not particularly strong. I mean, so obviously it could be weaker, and I'm probably looking at it versus Brent. So like the crack boxes are cheap,
right?
But the structure's still backward even in the front month. So it's not. Yeah, it could be lower, but it's feeling pretty weak. Jet's feeling weak. So Jet I actually thought would perform quite well in Q1, and it hasn't. And we're still in. Where the market's basically, the refineries are being told by where the jet's pricing not to make jet, which I think is partly what's leading into naphtha being weak.
Right.
So jet's kind of not performing. I still think jet will have a flurry at some stage, and I think naphtha will have a flurry at some stage as well.
Yeah, maybe into March then.
Yeah, maybe into March, kind of Q2 it's looking like.
That's interesting. People like to be long Q1 naphtha when margins, as in when
Typically,
throughput's
it's
quite
led.
high.
My understanding of it is propane normally performs in Q1 in
Okay.
winter,
Oh, fine.
and
Yeah,
that
that makes
pulls
sense.
propane out of the naphtha pool.
Yeah, that makes sense.
Um,
Also, so I'm jumping around a bit, but the winter, like last year, obviously we had this big Texas freeze, and it was a huge deal, had massive knock-on effects across the whole barrel. It feels like we haven't really had that this year, right?
What's
Especially,
pretty cold in the US, like
it's cold, but it's nothing like the supply shocks we were
as bad.
getting. Like last year, everything was.
But we're not through it either. I mean, we're still in like January, so
Yeah,
like this time.
I know. I think it's me wishing that we're like almost towards the end of January more than anything. But it does feel like there's a bit of time value on that, right? Like once we get through Jan, I mean, the chances of having this big cold
Yeah.
shock across the US is like diminishing.
I, I, I've not written off winter yet, and
Okay.
like, I mean, it's interesting as well. Like, diesel's sold off quite a bit the last couple of days, and like, people are now much more bearish, and like, it's yeah. I mean, I'm a bit. I think that's and maybe that's right, but it's happened quite early, I think,
Yeah.
and we've still got quite a bit of winter to
Yeah.
go.
I would say actually last year and especially this year and how the market is currently trading, then the contagion in sentiment is so aggressive. Like one person comes out selling and all of a sudden everyone's selling and everyone's bearish. And it's the total opposite the other way around. So last week everything felt so strong because there are a couple of buyers and was like, oh yeah, we're going to the moon, and now it's literally flipped on.
Yeah, I mean, same on the products. Like,
Yeah.
it's and that's potentially what makes it interesting as well, and like creates opportunities at the moment. Like, but yeah, the shifts in sentiment from one week to the next or one day to the
Yeah.
next, they're like,
But it's so aggressive. Like it feels like, as in for us anyway, when someone is selling, it feels like there is literally no buyers, and the opposite. So I guess I don't know. Maybe this is the contrarian trade as well. Like you can hold on or like position yourself in small enough size that you're kind of always taking the opposite flow, which
yeah,
obviously as market makers we
and
tend to do
trading the range
anyway.
as well. I think.
Yeah. Because otherwise you kind of just get wiped out by all this
Yeah,
kind of flow that gets pushed.
I think that's
and
really
then-
important. Like, you need to get your sizing small enough that you can kind of take opportunity.
Yeah.
From the big moves in prices rather than becoming part of the volatility and stopping out.
So gasoline, how's that going?
Gasoline, so it's not particularly strong at the front, but you wouldn't expect it to be because it's January and
Yeah.
we seasonally we're building, and we are building gasoline stocks. So like gasoline's normally weak now. Down the curve, like it feels like there's quite a lot of length, and like things like crack boxes as you get into summer aren't cheap.
Okay.
So I don't know if there's personally, I don't know if there's a screaming kind of trade there on like outright boxes, just because I think a lot of people have probably got in and the prices are reflecting length.
Yeah.
But that said, I mean, seasonally they do tend to go up quite a bit from here. So
Okay.
I don't necessarily think it's a bad trade, but I'm just a bit wary that there's maybe some summer length there.
Yeah.
I still like gasoline versus diesel, which is probably
Being long.
being long,
Yeah.
yeah. So like diesel tends to be kind of, I think, distorted further back down the curve because airlines buy jet and banks hedge it with the jet diff, and they also buy diesel cracks. So like deferred diesel tends to be quite high, and you don't get that distortion in gasoline. So I quite like it for that reason. And also gasoline tends to
Okay.
perform into summer.
So it's a good roll up.
It's got a good rail up. Obviously, didn't work the last couple of years with like the diesel spikes we had.
Yeah.
And I mean, it's looking less likely than the last couple of days, but I still think diesel could have a bit of a spike just in the front few kind of months into turnarounds, kind of Feb, March, and with cold weather. So I'm long gasoline versus diesel in the summer, but I've hedged. I've tried to protect myself a bit, buying some cheap diesel flies kind of around winter time.
Okay.
So if diesel does spike, I should hopefully kind of cover myself that way.
Yeah.
But it's quite a niche trade, which I'm not sure
Yeah.
it's that easy to get into. But
Okay, cool. So, I mean, potentially more of the same into next week, right? I think the main thing that we need to keep an eye on is what's going to happen when people are on holiday for Chinese New Year, if that's going to lead to potentially some pressure in further pressure in crudes. Not sure about the East. I heard that there was pretty good buying today, this morning. Was
What,
that on
on
gasoline from the east?
I think like a large major there came in and bought
Oh,
it, and I
okay.
think the market reacted to that.
Right. Again, the contagion.
But yeah, I mean, but kind of going home last night, gasoline felt pretty weak, and I
Yeah.
thought we'd come in this morning and like it'd be super weak.
Yeah,
But
yeah.
you know,
Okay.
one player's come out in the east, and it is the cracks there have jumped.
Yeah,
So
it just feels like a really vulnerable curve across all the
I
curves right now.
I I mean, it's interesting that get like what I found the most interesting the last couple of weeks was how gasoline spreads and crude spreads completely dislocated. So like if you look at RBOB spreads in the US, so if you do look at like a March June RBOB versus Brent crack box,
Yeah.
it's like off the chart low, and it's the market's basically they've completely dislocated, and maybe that's right because we're building gasoline stocks, and so you need some you need some storage economics, and gasoline spreads need to be weak to give that, and maybe Brent should be high because there's been this kind of scramble for crude and people are locking in barrels,
Yeah.
and also diesel boxes were quite high, which potentially allows keeps refinery margins okay and kind of supports the Brent spread. So like there are arguments why gasoline spreads and Brent spreads at the front could have completely dislocated, but it was just fairly incredible to see. It was
Yeah.
the most extraordinary dislocation.
Same with Dubai and dated. Yeah, there are potentially some like reasonably good kind of like curves we can look to trade on a contrarian basis against each other, but you just need to be careful, I guess. Yeah, headline driven market. So what can you do?
Yeah,
Just
yeah. Be
position
wary and
accordingly.
not too large.
Yeah. Okay, cool. So we'll catch up next week. I guess the main thing, I mean, who knows, maybe this time, in a week's time, will be the total opposite. But yeah, for me, freight, really need to keep an eye on that. And
What's your
potential
view on
downside to
any
some
view?
Dubai.
What's your view on spreads?
Yeah, I personally think the market does not want to be long. And so right now I'm going to be selling the most expensive thing on the curve, which looks to be those Dubai spreads. Potentially looking to get, all of these are going to be contrarian trades, obviously, but potentially getting into some days to Dubai. I do think freight will start softening once the threat of sanctions or if there's any resolution there. I think freight will be the first thing to go, which should help some of the time spreads a little bit and these days to Dubai contracts, etc. But generally, I think we're probably going to remain quite bearish for the next, or to be honest, probably into after run cuts. It just feels like the market is ready to have a short crude position this year.